Like we expect, Sonia, the first gap up at these times is looked at with some suspicion. And there are a lot of people who are stuck with positions who will bail out. After that will be the key, because generally there's a second half pullback. You'll see the first hour high and see if that starts to get taken out, then perhaps you will see things move up. By the way, while banks are doing well, just keep an eye on a couple of these pharma names as well. Cadila you spoke about, but I think the dark horse could well be Divi's Labs, because that's where there's going to be this MSCI weight factor as well, and is also an API manufacturer. So I think you'll want to go through with some of these stocks where you have some tailwind. But yes, Ashwini, your thoughts on market opening?
See, at the opening gap up, you sell and you see what happens. Often these sort of gap ups do not sustain, and the market starts to quickly give back gains, because if somebody was selling at 8,000, he will sell at 8,500. It's simple logic. So that way there is no value in buying, so you would not get buying here. But in fact, even if the market has to go in for a dip, by selling at the gap up, you will tend to capture a tradable dip. So my sense is that we will give back a lot of these gains.
Okay. Well, Anuj, along with all those pharma openings, Ipca Labs actually standing very tall. And I mean, even others like Glenmark are doing well, but Ipca had a huge, I think it was a 10% gain at the start, and it's preserved most of it, 8.5 even now. Ashwini, before we say goodbye to you, any thoughts on Ipca?
See, Ipca has been doing well for last many days. It's, hydroxychloroquine effect. So overall pharma is doing well, plus, it has its own sort of tailwind. So my sense is that at some point you will see maybe levels closer to 1900 to 2000 on Ipca.
Okay, gentlemen, thank you very much for staying with us through the morning and the pre-opening trades. The market's still holding on to almost all their gains, and the Nifty Bank, of course, the best gainer today, 6% higher. With that backdrop, let's invite our market master for the morning, Atul Suri, the CEO of Marathon Trends, joins us now. Good morning, Atul. Thank you so much for joining us. What a pity we have to speak to you on phone, but nevertheless, want to hear you. Is this recovery for real? Have we put a good bottom at 7,500?
It's hard to say, because when I have seen bottoms in the past, I feel that it's a process. It's not a day. And this process, or this bottoming out process, hello?
Go ahead, we can hear you, Atul. Okay. Well, we were almost, we should be able to hear him in a bit. At the moment, the Nifty Bank is giving up a little bit, just a little bit of its gains. Not IndusInd Bank though, but the Nifty Bank started at about 6.5 higher, now about 6% higher. Atul, yeah, you were telling us that putting a bottom is a process and not a day's job.
Absolutely. And, more so in the situation where we are in right now. Decreasing number of cases in New York for a few days does not really put an end to this nightmare that we are going through. So I think that there are going to be many stages to this. I feel that science or scientific breakthroughs are going to be very, very important, or ultimately the end game, I personally think, would be indicated there. It's an antiviral in the short run or a vaccine in the long run. But I think that to get a closure to this situation, ultimately, we will require some scientific breakthrough. And though, again, it's not my area of forte, I'm not a scientist, etc. But that's something that I look at closely, because that's when the panic, the fear, or a solution which is more long-lasting, rather than just a liquidity surge or maybe a crude move or maybe, some city, etc. So that's why I feel that this game will be a little more long drawn out. And levels that you mentioned, 7,500, yes, it's an important level because they were recent lows. And keep your fingers crossed that doesn't get violated, because it will then, bring in another round of selling. And on the upside, I find 9,000 in the short term will be will be the area of resistance. So at the moment, I guess the bigger story is not going to be where the index or how it will bottom out. I think that you're going to see a lot of sectorial churn, guys. what I feel is that a lot of marquee sectors or leader sectors that were there in the earlier up move, multi-year move, are going to get challenged. And case in point is banks. Like if you look at the month of March, where the Nifty may have been down some 27 or 25 or 27%, the private bank index was down 42%. When in the past, this sector has been always the engine to our market, and by virtue of its weightage, the financials, they were down 38%. So if you see, the biggest culprit in March has been the sector that has given us massive leadership. And we are all overweight, whether it is mutual funds or PMSs, in financials and private banks. And the question I think that I ponder on is not where the market will bottom, because I know it will be a process. But the issue is that how is the shift from an overweight sector going to happen? Because the hammering that you have seen in the best of names in the month of March is 40 to 50%. So I think the shift or the sectorial shift or the churn is going to be is a place which you will have a handle on. Markets per se, it's going to be very difficult to call a bottom.
All right. Atul, hi, good morning. On Friday, one interesting point which was coming up is, has the market leadership changed from banks to pharma? A classical indicator being the entire Nifty pharma market cap, actually less than 5 or 6 top banks. A lot of these stocks available at cheap valuations. But looking at the chart of Nifty pharma, can you make that conclusion as well?
I think it's a very relevant question. Also, I think that barring the ground realities or the fundamental changes that we are seeing in what is happening in banking in India vis-a-vis the opportunities that will come up in pharma, I think the issue is also of over-ownership and under-ownership. Just as you mentioned, the market cap comparison, it is very stark. And you will, as I said, that whenever sectors are over-owned, there is always a risk that whenever there's disappointment, there is unwinding to happen. And a sector that is under-owned, and if something positive comes up, there is a need to get to equal weight. So I think that shift also in all the funds portfolios, PMSs, mutual funds, as I said, all are overweight banks and financials. Even I was till last month. So the shift that is going to happen is, I think, can sort of work on the thesis, Anuj, that you just put out, that the leadership could be shifting. Again, it's very early days, but yes, at this stage, rather than trying to find the bottom, I think as a fund manager, I am more busy in trying to make the shifts in my portfolio. Of course, I would like to sell when markets rally, and I would like to buy when markets fall within these bands or ranges or days of extreme volatility. But the thought process that I am working towards, or my thinking at the moment, is that is the leadership in the market changed? And I do get an early sense that yes, new opportunities will emerge. And for me to take advantage of the pullback or the next bull market, whenever it comes, I need to be in those leaders. And that, I think, is going to be the game changer for me.
Okay, well, for now, the Nifty is holding at 84.05, so still